Welcome back, everyone, to the deep dive. Ready for another deep dive? Today,
Always.
we're heading to India. We're going to take a look at Shriram Finance Ltd.
Okay.
And you gave us a bunch of great sources on this,
Yes.
including financial snapshots, some market analyses, and even a little peek into their shareholder structure.
hmm
And this is a really fascinating company, and I think our listeners are going to be pretty surprised by some of the things we found.
Yeah, they've been around since 1979.
1979, that's a long time.
A long time.
Yeah, that's impressive.
They're really a major player in this non-banking financial company sector.
The NBFC.
Yeah, the NBFC sector. And you know what's really interesting to me is just how they've managed to really thrive for so long in a market that's so dynamic and constantly evolving.
Yeah, I think one of the things that really stood out to me is, they carved out a niche for themselves.
hmm
And they really focus on segments that are often overlooked by these traditional banks,
Yeah.
small road transport operators, right? Small business owners. I mean, these are like the backbone of the Indian economy.
Absolutely, and they're really fueling that growth.
Yeah.
And Shriram Finance recognized that gap in the market and became a leader
Yeah.
in financing pre-owned commercial vehicles and two-wheelers.
That's a huge market.
Massive market. Huge potential there.
Absolutely. And that's not all. They didn't stop there. They also went into consumer finance,
Mm.
life
Yeah.
insurance, stock brokerage,
Distribution.
distribution. It's like,
They
but
built a financial supermarket
they did. That's a great way to put it.
catering to such a diverse range of needs.
Yeah, it makes me wonder, with all this diversification, how do they make any money? I mean, is it just a tiny little bit of profit in each sector or what?
Well, I mean, they're part of the larger Shriram Group,
Okay.
a conglomerate with its fingers in a lot of pies.
I see.
So I think that diversification really helps them spread the risk,
Right.
makes them less vulnerable to downturns.
Okay, so they've got this diverse portfolio. They understand the Indian economy. But how healthy are they? I mean, are they really as healthy as they seem?
Well, on the surface, things look pretty good.
Okay.
They're listed on both the Bombay Stock Exchange and the National Stock Exchange.
Mm-hmm.
They boast a market cap of over 1,017,561 crore.
Wow, that's a huge number.
That's a pretty hefty number.
Yeah.
The stock's currently trading at 3,126%.
Oh, okay.
And, they pay out a pretty generous dividend to shareholders.
Yeah, they do. 21.6%.
21.6%. That's pretty good.
For investors, that's great.
Seems like a pretty good deal.
Yeah.
But here's where things get a little interesting.
Yeah.
One of the sources highlighted their impressive profit growth, a 23.4% compound annual growth rate.
KGR.
Yeah, over the past 5 years.
And for our listeners who aren't financial wizards, maybe break down KGR a little bit more for us.
Of course, compound annual growth rate.
Yeah.
It's just like a really great way of measuring a company's growth trajectory over a long period of time.
Yeah.
It kind of smooths out all the bumps in the road.
I see.
Gives you a really clear picture.
Better than just year over year.
Way better than just looking at the year-over-year changes. So that 23.4% figure,
Yeah.
nothing to sneeze at. That's impressive.
That's fantastic. It's one thing to have like a good year here or there,
Right.
but to have that kind of consistent growth?
Consistent growth.
Yeah, that's incredible.
Yeah, that's what gets the long-term investors interested.
For sure. But, it's kind of like they say, what goes up must come down.
Okay.
I mean, are there risks here that we should be thinking about?
There are always risks.
Of course.
And one thing that did raise a slight eyebrow for me
Okay.
was their interest coverage ratio.
Oh, now for our listeners who might be saying, what in the world is an interest coverage ratio?
Right. Simply put, the interest coverage ratio
Yeah, break it down for us.
tells you how easily a company can pay the interest on its debt.
Okay.
Think of it like you take out a loan
Okay.
to buy a car. The interest coverage ratio would tell you how comfortably you can make those monthly car payments.
Based on your income.
Based on your income, exactly.
Okay, so a healthy interest coverage ratio means you're cruising along, paying your bills, no problem.
You're good. You're not breaking a sweat.
But a low one, you might be cutting it close.
Yeah, you might be sweating a little bit.
Okay.
And that's where it gets a little tricky with Shriram Finance.
Okay.
Their interest coverage ratio is a little bit on the lower side.
Oh, interesting.
Now, it's not necessarily a deal breaker, but
Right.
it's definitely something to keep an eye on.
It's a good reminder that no investment is risk-free, right?
Exactly.
Okay, so we've got that. But you know what really piqued my curiosity?
What's that?
Their shareholder structure.
Yeah, that is a fascinating aspect of this company.
It is. So the public holds 53.29%.
A whopping 53.29%.
That's more than half of Shriram Finance's shares.
That's unusual.
Is that common?
That's not common at all.
It's like a potluck where everyone brings a dish and somehow the guests end up owning the house.
That's a great analogy.
Yeah, I mean, usually companies have a more concentrated ownership.
Right, right, with a few institutions.
Yeah, a few large institutions, or maybe it's family owned.
Right.
This is really dispersed.
Yeah, this is really unique.
It's very unique.
But does that make them, I mean, I guess it makes them more resistant to the whims of, like, a single shareholder?
I would think so, yeah.
Right. But wouldn't it also make, like, decision-making?
Oh, absolutely. It's a double-edged sword.
Yeah.
Could lead to slower decision-making.
Like 100 people trying to figure out where to go for dinner.
Exactly. Imagine trying to get everyone to agree on a new business strategy.
Or investment.
Oh, yeah.
So we've got that. We've got this unusual public majority ownership.
Right?
And then on top of that, the sources are saying that in September 2022, there was like a major shift
Yes.
in the shareholding structure.
A big shift.
New players entered the scene. Banks, foreign portfolio investors.
Banks and foreign portfolio investors.
Mhm.
Wow.
Yeah, and that's significant because it seems like Shriram Finance kind of opened its doors to this wider pool of investors.
Yeah.
Maybe to attract more capital.
Yeah.
Or diversify funding sources. It's a coming-of-age moment for them almost.
It does feel like that, like they're attracting the attention of
The big players.
big players.
On the global stage.
Yeah, but how does that impact their decision-making and their overall strategy?
Right.
And are they going to stay focused on,
Serving everyday Indians?
yeah, serving everyday Indians, or are they going to chase bigger profits
Good question.
and cater to these international investors?
These are the questions we need to explore further.
Yeah,
And luckily, you've given us the information to do that.
that's right. We're going to get to all of that after a quick break. So it's like they're at a crossroads.
Yeah.
Trying to figure out, do we stick to our values or go for this global expansion?
Right. Got to find that balance.
Yeah. But, before we get too lost in the future, let's step back for a second
Yeah, let's ground ourselves
and look at where they are right now
in the present.
in the market.
Yeah. So they're a big player we know
Mm-hmm.
in the pre-owned commercial vehicle
Right.
and two-wheeler financing space.
Yeah.
But how big is that market really?
Yeah, that's a good question. I mean, it's easy to throw around, terms like massive market, but what does that actually mean for Shriram?
Well, think about India for a second.
Yeah.
It's a country with a rapidly growing population,
Right.
a burgeoning middle class.
Mm-hmm.
Millions of people are migrating to cities,
Yeah.
looking for opportunities.
Yeah.
And for a lot of them, a personal vehicle represents freedom, mobility,
Right.
a chance for a better life.
It's a pathway to economic empowerment.
Exactly. But for a lot of people, a brand new vehicle is just not possible.
Too expensive.
Yeah, it's out of reach.
So that's where the pre-owned market comes in.
Exactly. And Shriram is there to bridge that gap.
Yeah, it's like they're financing dreams.
They are. They're financing dreams and aspirations.
But are there challenges that come with operating in a market like that?
Oh, of course. I mean, the Indian economy, while it's growing,
Right.
it can be prone to fluctuations.
Right.
Inflation, interest rate hikes, and regulatory changes can all have an impact.
It's like navigating a ship through choppy waters.
It is. You need a skilled captain
You need a good crew.
and a sturdy vessel to weather those storms.
That's a great analogy.
And speaking of regulations, the Reserve Bank of India, or RBI,
Right.
plays a big role, right?
Yep, huge.
Any changes they make
Mm-hmm.
can impact Shriram's ability to lend and grow.
So it's not just about understanding the company.
No.
It's about understanding the rules of the game.
It's like playing chess.
Yeah.
You got to think ahead. You got to anticipate your opponent's moves.
But in this case, the opponent is the regulatory environment.
Exactly.
And that's why it's so important. For anyone who's interested in this company, to really stay informed
Stay informed.
about what's going on in India
Mm-hmm.
with regulations,
Absolutely.
because things can change quickly. Speaking of things that can change quickly,
Yes.
this is a competitive market.
Oh, very competitive.
We've mentioned some of the names: Bajaj Finance,
Mm-hmm.
Cholamandalam Investment and Finance Company, Muthoot Finance.
Right.
These are big players.
Heavy hitters.
So how does Shriram differentiate itself?
One of their key differentiators is their extensive network.
Okay.
particularly in rural areas.
Ah, that makes sense.
They've got over 1,758 branches across India,
Wow.
831 rural centers.
That's a smart move,
And it is.
given their target market, small
Exact.
businesses,
Right.
transport operator.
We're often located outside those major cities.
Yeah,
Having that rural reach give them a big advantage.
for sure. It's all about understanding your
Fracking
audience.
up and
Yeah.
being where they are.
Exactly. And they've also built partnerships
Oh, yeah.
with like 500 private financiers,
They have.
further expanding their reach. It's like they've woven this
Intricate web.
intricate web, yes, connecting with communities all across the country.
Absolutely.
But, beyond their physical presence,
Yeah.
they also seem to be really committed to transparency.
Yes, they are.
Yeah.
They're regularly issuing announcements, annual reports.
Mm-hmm.
They even host con calls.
Con calls, those can be a goldmine
They can
of information.
Absolutely.
But they can also be a little dry
A little bit dry.
and jargon-filled.
A little bit jargon-filled.
Bro.
But here's the thing.
Yeah.
They provide transcripts and presentations
Oh, that's great.
from the con calls.
So you can actually understand what they're saying.
Exactly.
So for anyone who really wants to,
Dive deep.
dive deep into the nitty-gritty.
Those con call transcripts are a must-read.
Yeah, it's like going behind the curtain.
Behind the curtain.
You're seeing how things really work.
And sometimes what you find behind the curtain
Can be very revealing.
can be very revealing. For example, did you know that they provide a segment-wise breakdown
A segment-wise breakdown. What does that mean?
of their financial performance?
So, how truck financing is doing compared to life insurance.
Exactly. It allows investors to really see which segments are driving growth, which ones are struggling.
It's like a report card for each part of the company.
Exactly.
So we can see if they're acing consumer finance, but maybe failing a bit in the stockbroking department.
You got it. That's really invaluable information for anyone trying to figure out the health of the company.
So it really does seem like they're this blend of traditional values and modern approaches.
It's a delicate balance.
They are. They're rooted in these local communities,
Yeah.
but they're also embracing these global capital markets.
It's like they're trying to stay true to their roots, but also reach for the stars.
That's a beautiful way to put it. And, one other thing that I found really interesting
Yeah, what's that?
was their approach to risk management.
Oh, yes. Very interesting.
It seems very unique.
It's a little different. Unlike traditional lenders who rely heavily on, credit scores and financial data, Shriram Finance puts a lot of emphasis on personal relationships
Interesting.
and local knowledge.
So it's not just about the numbers.
It's not just about crunching numbers. It's about getting to know the borrower,
Okay.
understanding their business, assessing their character.
So they actually go out and meet people.
They do. They have this network of field officers
Okay.
who live and work in the communities.
So they're like the eyes and ears
They are,
of
yeah.
the company.
Providing insights that you wouldn't get from a spreadsheet.
It's like old school banking
It is.
where relationships really mattered,
Mhm.
but combined with that modern data analytics.
Right. And that combination seems to be working for them. They've managed to maintain pretty low default rates.
Wow. That's really impressive,
It is.
especially given the customer base.
Right. A customer base that's often considered high risk
Yeah, higher risk.
by those traditional institutions.
It's a testament to the power of,
Human connection,
yeah.
understanding the context.
But can this personal touch scale
That's the question.
in an increasingly digital world?
That is a great question and
Yeah.
one that they're actively grappling
Yeah.
with. They recognize the need to embrace technology to reach a wider audience.
To reach more people,
Exactly.
but not to abandon what's working.
Right. Got to find that balance again.
So it's about, leveraging technology to enhance their strengths.
Exactly.
Okay. And that brings us to
Fintech.
fintech. It's like the shiny new toy in finance.
It is. Everybody's talking about it.
Disrupting everything. But how does a company like Shriram, with these deep roots in traditional banking, how do they adapt?
It's a challenge. It's a challenge a lot of companies are facing, these established institutions.
Yeah.
But I wouldn't count them out.
Yeah.
They're not ignoring fintech.
Okay.
They're taking a strategic approach.
So they're not just like burying their heads in the sand,
No.
pretending it's not happening.
They're aware.
Okay, good.
They're aware. They've been investing in technology
Okay.
to improve their operations,
Yeah.
to enhance the customer experience, and expand their digital presence.
It's like giving their classic car a turbocharged engine.
I like that.
Yeah, so they're not trying to become like a fintech startup overnight,
Right.
but they're making these smart moves,
Smart moves to stay relevant.
and they're also exploring partnerships
Oh, interesting.
with fintech companies,
Okay.
which is smart
Yeah.
because they can kind of leverage those innovative solutions,
Right.
reach new customers.
It's a win-win.
It is. It's a win-win.
Right.
Fintechs get access to Shriram's customer base.
Right. Their knowledge.
Yeah, their deep understanding of the Indian market.
Exactly.
And Shriram gets the technology.
And get the technology.
You get the innovation. It's like they're building bridges between the old and the new.
I like that. Yeah. It's a fascinating dance.
It is. It really is.
Yeah.
But let's bring it back to those international investors that we talked about earlier. How do they fit into this whole picture?
Well, remember how we discussed the shift
Mm-hmm.
in their shareholder structure back in 2022?
Yes.
That influx of banks and foreign investors,
Mm-hmm.
that wasn't just about diversifying funding.
Yeah, okay.
It was about signaling to the world
Mm.
that they're ready to play on a bigger stage.
It's like they sent out the bat signal
They
to global investors saying, hey, we're here, we're growing, and we're open for business.
come join us.
Exactly. And the investors are listening.
They are. They see the growth potential in India,
Right.
and they see Shriram's unique position.
But how are they balancing that, right? Because now they've got these expectations from these global investors,
They do.
but they still have this commitment to financial inclusion.
It's a tightrope walk.
It is. It's a tough one.
It is. They need to show investors returns,
Right.
but they also don't want to abandon their values.
Right. So it's like they're trying to write two different stories.
It is, yeah.
At the same time.
They're trying to find that balance.
One is about growth, expansion, global ambition.
Right.
The other is social impact, financial inclusion,
Helping everyday people.
empowering everyday Indians. Can they bring those two together?
That's the question. Can they weave those two stories together?
It's a challenge.
It's a big challenge.
But you know what? They've been defying expectations for over 4 decades.
They have.
So I'm not going to bet against them.
They've adapted. They've innovated.
Yeah,
They've stayed ahead of the curve.
they have. So this has been a really insightful deep dive.
They has.
We've covered a lot of ground here.
We have, from their history,
Their business model,
their approach to fintech,
it's incredible.
and that balancing act they're doing.
And their story is still being written.
It is. It's unfolding.
So for our listeners who want to learn more, go check out Shriram Finance's website.
Yeah, their investor relations section.
They've got tons of information there.
Annual reports, financial statements, presentations,
Even those con call transcripts.
those con call transcripts.
And don't forget to keep an eye on what's happening in India.
Right, the Reserve Bank of India's website.
Yeah, that's a great resource
Is.
for understanding the financial landscape there. This deep dive has really shown us that this company is more than just numbers.
It's true.
They have a soul. They're driven by a purpose.
It's a purpose-driven company.
And they're making a difference
They are.
in the lives of millions of Indians.
And their story is going to continue to unfold.
It is. So we'll be watching. So to our listeners, stay curious, keep exploring.
Never underestimate the power of a company that's committed to making a difference.
Well said. We'll see you next time on The Deep Dive.